Hello everyone, welcome to another video. And in this video, I want to talk about the one thing that you need before you purchase your next stock. And if you haven't figured it out already, that one thing is an emergency fund. And I'm going to refer to this NerdWallet article, and it's going to just help guide the discussion. It's imperative, especially if you're invested in the stock market, it's imperative that you have an emergency fund, because there's nothing more painful than having to liquidate your stocks in the event of an emergency. So I'm going to go ahead and say, even though this is not, I'll start by saying this is not investment advice, I'm not a financial advisor, but having over, I don't know, at this point, 13, 15 years of experience in the stock market, and having had to liquidate my investments before in order to fulfill a need, it is definitely not fun, especially in times like these, right? Where if you sell right now, you're going to be selling likely near at a price lower than what you paid. And unfortunately, that's while at the same time, cost of goods and services are going up. So again, with the uncertainty that's out there, moving forward, you have to have an emergency fund. All right, so quickly, what is an emergency fund? Obviously, it's exactly what it says. It's pretty much for your unforeseen emergencies that come up. That could be home repair, car repairs, and unemployment. And this is the one actually that prompted me to make this video. So we have obviously now a low unemployment rate. However, as we've seen things kind of ebb and flow in the market, looking ahead, if we are entering into a recessionary environment, unemployment starts to go up, right? Companies start slowing their hiring, cutting back hours, then that is what I think is going to catch a lot of people off guard. It's what happens when your income changes. That is why you really need an emergency fund. All right, so how much should you save for an emergency fund? They talk about starting off small, at least $500, but work your way up to half a year's worth of expenses. And really that should be the goal, 3 to 6 months of your living expenses in a savings account. And I think that's the important part about this emergency fund, is that it's not having 6 to 8 months or 3 to 6 months or a year's worth of funds in a stock account, in a trading account, or tied up in real estate, or tied up in something that's illiquid, right? Where if you sell, you're going to take a huge loss. It's having that readily available so that way you can tap into it in the event that you were to lose your job or things were to change, for the unforeseeable future. If there's any changes, you'll be good to go. So where should you put your emergency fund? Again, you see here, it talks about a high interest rate, easy to access savings account. We know that it's very hard to find a high interest rate savings account. And we know that in order to have a high yield savings account, you have to have probably a good chunk of money. And although it really sucks to have your money in a bank right now, when you have inflation that's, eating it up at whatever 8% or whatever the inflation rate is, it's still better to have that money, at least in the near term, again, 6 months saving. It's best to have it than to be forced to liquidate down the line. All right, how do you build it up? And that is pretty much just setting your money goals. I have a video for talks about the zero-based budgeting, which if you're on a budget and you're interested in learning how to budget, zero-based budgeting is something that I've used, and several other hundreds, millions of people have used it, and it's a great way to save money. It really is a great way to budget, and you can plug in your savings that way. And then let's see, when saving, draw a line between emergencies and anything else. And again, this savings fund that you have, or this emergency fund, you're really going to want to have it as a true emergency. And then actually on this article, and I'll put the link in the description. Sorry, it has a little quiz here. So if your monthly rent or mortgage payment, we're going to say is $1,200. Your utilities altogether was $300. I'm just going to fill it in. Your telecom, internet, I'm just going to say $50. Monthly insurance, I'm going to say $200. I'm just putting in basic assumptions. Transportation, I'm going to put $400. And then monthly debts, I'm actually going to put in $0 for this one. Monthly grocery expenses, price of food has gone through the roof, and then other expenses, I'm going to put at $90. And what we have here is, this represents 6 months. Okay, so just based on those assumptions, I should have saved $15,840. So again, when you are going through your calculations, see what it comes up with, compare that to what you have. And if you don't have it, that's okay. But I really would advise or I really would suggest, not advise, I really would suggest considering starting an emergency fund and building up to this level. Because a real world example would be if we consider the stock market and we consider where it's been. I'm just going to pull up a quick chart here just to give context. Okay. I don't have a chart with a trend line. They have some really good charts out there that would show kind of on a longer term basis. But this is the triple Q. So this is the NASDAQ. And of course, this would be the ETF that tracks the NASDAQ. So not even considering, single stock risk. When we look at this and this move up and we say, okay, well, actually to return to pre-pandemic levels, you're looking at a roughly 20% additional drop if we were to just go to pre-pandemic levels. Now, you have your own mechanism for analyzing stock market, analyzing risk, but considering the environment that we're in, right? Rising interest rates, high inflation, just everything seems to be kind of bleak right now. We have people, other countries fighting, possible issues in China and Taiwan. So we have so many potentially negative events that, a 10 to 15% drop can happen. It's not outside of the realm of possible. So if that happens and you continue to buy stock and then something happens, say in your job, would you be able to withstand that and then thrive when things eventually turn around, right? Because following this history, we know the stock market has that upward right movement. However, can you maintain when it takes the elevator down, however low it may go? All right. So as always, I appreciate your time. I hope you found this video helpful. It is just a food for thought question. Do you have an emergency fund? If you do, how did you build it up? Maybe share that in the comment section. And if you don't have one, maybe think about ways that you could start one. Even in these tight times, what are some ways that you can put money aside so you're not forced to liquidate in the future? Alrighty, as always, this is Dr. Diffins signing off. Bye-bye.